Growth House Podcast. This is Jesse Ray. I'm here with Yakov Smart. Welcome to the Growth House Podcast show.
Thank you for having me, Jesse. Happy to be here.
So I'm really excited. You're an expert on raising private capital. You have the Investor Attraction Academy. You have your own podcast, Raising Private Capital, which I've listened to many episodes of. And I want to dive into all of that. But first, I want you to kind of paint a picture for our audience of what life looks like right now for you, and maybe what's the main project that you're working on.
Well, the main project I'm working on is Investor Attraction Academy, and that's where capital raisers, investors come to us who want to attract investors, right? And so we've created a platform, a community, a program, even initial services where people get a lot of the online stuff built out on their behalf. And what I'm finding, and I wrote a book on this, people can look this up on Amazon, it's available, it's called Attracting Investors. What I'm finding is there's a gap between people who want to go out there and raise private capital and people who want to invest passively, right? And there's a huge communication gap. And people who are so into the world of real estate investing don't realize that the average person who invests passively doesn't know what the hell a syndication is, right? They don't know these terms like cap rates, IRRs, they don't know what the hell it means, right? And so there's a huge communication gap in building that trust, and that gap is multiplied when it starts to happen online, right? And so part of the work that we're doing in the community that we're building in Investor Attraction Academy is showing people how to build that gap, how to find their voice online and develop their own thought leadership. And it just so happens that raising capital becomes a byproduct of that.
Before we get started, there's going to be people that reach out like, Jesse, I don't understand any of those words that were just said. What are the three main, acronyms or words that people might hear while we're talking today that they probably should know the definition?
I'll do my best not to go too lingo-y today. First of all, cash on cash returns, right? We're pretty obvious, right? Because if you get 8% cash on cash, that's cash, right? Passive income, right? Which means mailbox money, making so you invest in a deal, they hold on to your principal, right? Which is another word, right? So you take it for granted. Principal is like the amount. So let's say you invest 100,000 and then you're getting a 10% cash on cash return. So over the course of the year, you're getting 10% of that, right? And so the other thing that happens is there's a hold typically on capital raise and investing, right? So maybe you invest $100,000 and there's a 5-year hold time, right? So the principal is in the deal, but the passive income you're getting is, let's say it's that 10% every year. There's different ways deals are structured. Sometimes at the exit, you're getting another chunk, right? Sometimes not. There's debt, equity, all these different things. But the biggest thing for people to realize if they're new, let's say they're investors, but they're new to capital raising, right? A term that a lot of people need to know is a private placement memorandum, right? PPM. And that's something you file typically with an SEC attorney. There's different ways to create it. I'm not an SEC attorney, by the way. I want to make that very clear, not giving legal advice, but it's an important term to know, right? And it's also important to be in SEC compliance, right? Because there's a term, 506B, 506C. Again, I don't want to go too far down this rabbit hole because SEC attorneys can talk about this far better than I could. But typically what happens is if you're doing either a joint venture or a 506B, let's say, then it's for people that you already know, friends and family, but they don't have to be an accredited investor, right? Versus, let's say, a 506C offering, that's an accredited investor, right? So an accredited investor, people who don't know, I forget the exact number, actually, if it's 200,000 or 250,000 a year. If they're a solo, then it's like 400,000 or something like that, married household, or a net worth of $1 million, excluding their home value, right? And that definition, I think it might even be changing. So if people want to double check that, they can definitely Google it. But these are all important things to keep in mind, right? Because it starts with capital raising, like a lot of other things in life. It's starting with what's the goal in mind, what's the vision, right? And being able to reverse engineer some of that, which is just a really important way to think of things.
And you have such an interesting background because if I remember, we met at Nico's. He had like this pickleball basically tournament. That's where we met. Yes. And then I was talking to you, and then you mentioned like you come from, I think, a marketing background. Is that correct?
Yeah, so I'm an internet marketer. Yeah.
So let's dive into that. So I'll let you decide where to start the journey, but I kind of want to hear this journey of how you got to where you are now.
The journey's got to start with internet marketing, right? Actually, the journey starts with a desire for personal growth. That's where the journey really starts. So I got into personal development in my late teens. And I realized I did go to school. I went to college in Southern Georgia, which is where I grew up in the Atlanta area. And I realized about a year and a half before graduating that I was on a very dumb path. Like the bachelor's degree that I was seeking was no bueno. It was not what I wanted. And I remember we had a speaker come in at one of my classes who was in the industry. I was getting my degree in public relations. And the reason I picked public relations was I wanted to graduate early, and there were a lot of girls who were doing that. So I thought, win-win, right? And
Smart man.
the guy was miserable, man. The guy that came in, he was like this middle-aged white guy, right? That's the best way I can describe him. And he was like, he was working in corporate PR, and I was like, I don't want his life. It's like at all. No, nothing in me wants that. And so I started seeking something beyond that. And I realized, hey, online businesses are the way to go. You can do it from anywhere. You can sell products, information online. I was never drawn to e-commerce, although I think it can be very lucrative. I was like, okay, let's educate people and sell that. So my first online marketing project was when I was a college student, wrote an ebook. So my business idea was I'm going to write a book for college students, sell a ton of copies and make a ton of money. Right? And there was not the best idea in the world, but I learned a shit ton about marketing, if I can say that on the show.
Go ahead. And then what year is this for just like context? Because with internet marketing,
2014, 2015.
okay, so it was definitely something popular, but wasn't like as popular as it is today.
Definitely popular. Affiliate marketing was very popular, like, selling stuff on Amazon through affiliate links, all that kind of stuff. So I published the ebook. That was my first time building an email list. What I would do is I'd use Facebook groups that were like, for new students at colleges, right? And I'd post value there. I'd post like these blogs and articles, and I would drive traffic to my website, then get people on an email list, ended up selling a few copies of the book that way, a few copies on Amazon. And then after school, I was 22, ended up moving to Vegas, which was an interesting, whole different story on its own. I had no reason for moving other than just that feeling. And I was intrigued. So I did it. Didn't know anyone there, didn't know what I was going to do. Ended up figuring some stuff out, did some software sales for a little while, and then jumped into this online space, helping small business owners tap into LinkedIn, right? Which at the time was very different than it is today. I started getting clients that way, almost accidentally, actually, but it started working out really well. And then I built a kind of a speaking consulting business on the back of that. I would go and I would travel across the country, do seminars, sell products from stage, came up with like different courses, different things. And then fast forward to 2020 when COVID happened, I was very much in the event space and events went away. And so at the time we had some students who were real estate investors who wanted to raise private capital. And they were intrigued by the idea of using LinkedIn and other social media to go out and find investors. And so I created a program called LinkedIn Capital Raising Accelerator in 2020, launched that. My dream was to have a pre-recorded webinar that would sell a course and to make money on autopilot. And so I did that, not to the extent that some people might think. I wasn't like, making millions, in my sleep, but it was definitely like becoming very much passive income, where I was just focused on getting people to the webinar, and then the webinar would sell the course for anywhere from $1,000 to $1,200. And there were some additional sales as well, right? And so in 2021, I really started to pivot into Investor Traction Academy. Again, not as in, I didn't like make a plan and like, just sit there and design it and then just snap my fingers. It was more like, okay, what do people want? People want something that's a little more intimate, a little more done with you, right? And so I created the first iteration of the current offer. Fast forward, we've had students from all over the country. We're building community right now. And it's really evolved where I only work with people who are raising capital, right? And most of our members are in real estate, but we have a few people that are doing other alternative assets. And to me, raising capital is about communication and it's about marketing and sales. If you're good at marketing and sales, you can raise a limitless amount of capital. And so at its core, a lot of what we teach, a lot of what our people want to learn from each other and from me is marketing and sales, and doing it in this context of building relationships with these high net worth individuals and getting them to write checks as passive investors.
Most of your community, are they looking for like a private money lender? Are they doing syndications, real estate funds?
They're typically doing funds and syndications.
I love that. And I can't wait to learn more. And we actually had something where we talked about before the podcast. I'm like, hey, what's something we can like dive into? I think it's fair just to jump right to that right now because I'm excited to learn this. So, how to turn strangers into investors. Before we get started, you guys know it's going to be good. So go ahead, 5-star review and rating, and also go check out his podcast, which again is Raising Capital Show. So let's do this.
All right. So how to turn strangers into investors, right? So the first step is you have to figure out, well, actually, is most of your audience, have they raised capital? Are they in real estate? Or give me a sense, because that'll allow us to really tailor this.
It's a mix. It's people who are trying to get into, to scale their real estate. So like, hey, we ran out of our own capital. We're looking for private money lenders. And then also we have the people that are, have real estate funds or syndications. So they're looking to get, bigger dollar amounts.
Okay, cool. So the first step has to be, no matter who's listening, you got to start with the mindset, right? So we have to realize that everyone wants to invest in real estate. Whether they know it or not, everyone's heard it's a good idea, right? Real estate, the rich invest in real estate, ambitious people who have money know real estate investing is a good idea, right? So sometimes people are so in the weeds of real estate, or think that, oh yeah, who would want to invest with me, right? Or like, hey, if they want to invest with someone, they would have invested with someone already, another syndicate or another investor. The reality is they probably don't even know it's possible to lend their money, right? It's even possible to invest in these deals passively. So that's step number one, is like, there's plenty of money. There's like $4 trillion sitting in retirement accounts right now, 4 trillion with the T, right? That through self-directed IRAs can be deployed into, guess what, your deals, right? So you only need a small chunk of that, right? So it's coming from that abundance mindset first and foremost. That's really important. Even if you've never raised money before, sometimes it's easier if you've never done it before, right? Because you have that belief, you have that conviction, you don't overcomplicate things. People overcomplicate the shit out of this, right? I need a fancy CRM, a fancy website. I need to go write 10 books. I need to do this before to go do 10 full cycle deals. Like, no, you don't. It's like, if you can solve someone's problem, you've got a good opportunity for them, you can have a conversation with them. That's really all you need to do, right? So then most people start with their current network, right? Issue with the current network is a lot of people don't know a lot of people that can write, $50,000, $100,000 checks and up. Some people do, some people don't, right? By the way, with current network, you might be surprised. You might think someone's broke, but they've got, an old 401k from 10 years ago that has 250 grand in it that's not doing anything, that they'd love to get some mailbox money in, right? So that's, asking the current network is valuable. But let's say you don't have anyone in your current network. Let's say you're in the middle of nowhere. Everyone from your old life is broke. You're starting this new life. You want to go out and raise capital, right? So now we talk, okay, where can we find these people? Where can we find someone who might have access to these resources, right? And the place to do it is social media, right? For just about anyone, or at least the internet. Online, you can reach anyone. I think people are going to be in agreement with that, right? And so I would narrow it down to a couple to start. LinkedIn's a good place. Facebook's a good place as well. Instagram can be, right? But initially, if you're starting out, you want to take away those layers of complexity, right? So if we were to talk about paid advertising, that's a whole different rabbit hole, right? There's so many complicated things online. Starting a podcast, complicated, requires a lot of time, energy, money even. So if someone is not willing to put those things in, those are long-term plays. I highly recommend building a personal brand, all these different things. But if you want to really simplify it down, what does it come down to? Having conversations, making offers, right? Getting in front of the right people, having something attractive for them. So using social media, let's just use LinkedIn and Facebook as examples, just to keep it really simple. On LinkedIn, you can run searches to find people based on occupation, based on where they live. Same thing, Facebook, there's Facebook groups, right, that you can join that are free to join. You can do searches, people interested in investing or people by occupations, right? The next thing is getting clear on, okay, so what is it that I'm raising for, at least in a general sense, and how big do I want these checks to be, right? And what's the value proposition? What's that hook that's going to get someone to want to have a conversation, at least? Not to write a check, but to want to have a conversation. What's attractive to investors? So what do passive investors want? Right? Here's some things, and most passive investors want similar things, right? And in our program, we talk about 7 different avatars. We can talk more about that if we have time, but just to keep things really simple, they want passive income. It's usually a big selling point. But why do people want passive income? Let's go a layer deeper. They want more freedom, right? They want to be in the know, right? They don't want FOMO. They want to miss out on opportunity. They don't want to be a victim of inflation. They certainly don't want to lose their hard-earned money in the stock market. They don't want sleepless nights. They don't want their significant other to think they're dumb or incompetent, right? So again, these are like, want to go deeper into the psychology of it. They want to save on taxes if that's available, right? They want to grow wealth, build a legacy, all these different things. And oftentimes they just want stability and security, right? Of knowing, okay, their money's parked in a recession-proof asset. So these are what we call angles, right? And so let's imagine we're taking LinkedIn or Facebook. We have a targeted list of people. These aren't people necessarily, you don't necessarily know their net worths, how much money they're playing with, but let's say you're going for a list of like, let's call them, let's say CMOs, for example, just CMOs who live in Phoenix. Let's just use that as an example. Or maybe someone lower down, like a senior IT manager, different types of avatars, right? And now you can simply connect with them, friend request, connection request. And that's the first touch point, right? If you've got a profile that positions you as someone who does real estate, let's say, right? But in a way that's attractive to them, right? Now, like I'm a real estate investor. Oh, hey, I partner with, I'll just give you some word. I partner with people so they can invest in real estate without doing any of the work themselves, right? That's one way to look at it, right? Okay, so now it's attractive. Now they're intrigued. You can build up the profile. But again, I want to keep things really, really simple. So now you've connected, and now the message is basically like, hey, here's who I am. By the way, have you ever thought about investing in real estate, right? Or what's your opinion of the market, right? So you're starting a conversation or saying, hey, I'm partnering with people on this deal. Would you like to learn more, right? Something simple like that, right? Just start the conversation, but don't pitch right away. Even if you need to close in 24 hours, don't pitch right away. Dumb.
I was gonna say, how soon are you in the friend request? Are you like, hey, by the way?
And by the way, I need 200K and I need it in 2 hours. You don't know me, but I'm a good person. So why wire me the money? No. And then from there, segueing it to a phone call, like, hey, let's chat, let's get to know each other over a call. Take the conversation from there. And then a few things different have to happen, right? For them to agree to a call, there has to be a level of curiosity, right? Initial level of rapport. You have to get their attention. So if you're going to a pitch right away, you're going to lose their attention. Right? Same thing with your social media posts. You could connect with these people. Let's say you connected with 100 people, and now you're posting something on social media, right? Now some of them are starting to see it. Again, it's got to be enticing enough to build curiosity. Hey, comment below, DM me, right? But the curiosity is like, okay, what are they going to get from it, right? So you've got attention, you've got curiosity, and those are usually enough to bring someone to an initial conversation. Or if we wanted to add a layer of complexity, if you scale, have an opt-in, right, to get them to give their email for something for free, right? But let's say, again, we're just keeping things super simple, no complexity, no automations, which I recommend you have all these things, but just like to really keep it simple. First conversation, what are we doing? Establishing that rapport, qualifying how familiar someone is with passive investing, how educated they are, how familiar they are with you, a little bit about their pain points, any ways that you might be able to help them, right? And then from there, getting them to more of a deep dive where you can really put pen to paper and talk about what a strategy might look like for them, right? Or like what investing, partnering with you in one of your deals might look like, right? So, and then from there, that's when you make them an offer, if it makes sense to. And you see, you also might need to educate them about self-directed IRAs, right? Or you also there's different ways to access capital, right? What's the other thing? The home equity credit lines, right? There's different ways for people to access money, right? So that it starts with educating yourself as well, knowing the tools available, because someone might not have that money liquid, but they've certainly got money sitting in a retirement account, right? And then typically, it's just having the courage to ask, right? Okay, so what's your allocation going to be? Right. And seeing
Assumptive close.
Yeah. What's that?
Is it a little assumptive close? Just so
yeah. So here's what it's going to. I can send over the paperwork and let's get started, right? And you'll be surprised. I'm always amazed when I hear the stories of like people going out and raising, like how simple it is compared to what people probably imagine, right? Because it's a logical decision, but it's also an emotional decision, and it's just I believe it's a really easy product to sell if we look at it like a product, right? When you compare it to the stock market, for example, right? Especially if you're doing deals with like shorter turnarounds, right? And different things. So the other thing too is you want to make sure that you're being grounded and not hypey, typically with this audience. Like if you're being like hypey, like if you're just talking about like these big double-digit returns and they've never heard of returns more than 4%, you're going to scare them, right? So you want to ease them into that, right? So it doesn't sound too good to be true. And also, how simple can you make the pitch, right? So if you're raising money to go buy a single family house, you're going to renovate and flip in 6 months. Like, okay, there's this house. Here's its value. We're able to get it for this much. Here's how we're mitigating risk. Here's what's going to happen. We're going to put this much in. We're going to sell it for this much. Is what you're going to get on your money, and it's going to happen in 6 months. It's like the simple step-by-step vision, right? You don't need to go into every detail. So that's the process at a very high level. There's obviously a lot more nuance, but that's the process for building that database, starting to build those relationships online.
So you have that initial phone call. Do you then typically book a presentation? Like, are you then showing them a deck? And then also on a very high level, what does a deck typically look like?
Mm-hmm. Yeah, so typically you want to segue into call it an intro call and a deep dive call, right? And the deep dive call is meant to be educational. It can be about a specific deal, but it's more so like introducing. Ideally, you have what our members do is they have these webinars, right? That someone watches before the second call. And that way someone hears you speak. And now there's that credibility. Now there's positioning. It's that much easier to get someone to say yes, right? So in these intro webinars, typically it's telling a little bit more about your story, your investment thesis, deals you've done, problems you're solving, forecasting, all these types of things, and also addressing concerns, right? Because a lot of people talk about returns and upside. Who's talking about mitigating risk? What happens if shit hits the fan? How are you mitigating risk? How do they know it's not a Ponzi scheme, right? These are things to talk about, right? So instead of them thinking that secretly, just have that in your deck, right? Have that be part of the conversation, right? And also, it's not as much of a presentation as it is asking questions, right? Asking questions, being curious. What are their goals, dreams, and desires? What would hold them back? Have they invested before, right? Most people you talk to, I believe, are going to be greener investors, meaning they haven't invested passively before, right? And it might be scary to them, right? It's interesting. I was actually having this conversation a few weeks ago, and more people know about crypto investing than what a real estate syndication is. I want you to think about that. More people know about crypto investing because these crypto guys, they've the place where the Lakers play. It's called like
Crypto,
crypto.com.
crypto
Yeah,
arena.
there's no real estate syndication arena, right?
That's true.
People know what a REIT is, kind of, right?
Yeah.
But they know what crypto is. But you say real estate syndication, real estate fund, people are like, huh? So there's a degree of education. And I believe having too much lingo, going too detailed, actually hurts people from understanding too early, right? So initially it's about, what are the main features? What's in it for that person? How does it solve their problem? And then your deal happens to be a vehicle for them getting where they want to go.
What about personal guarantee? Do you recommend someone saying like, "Hey, I'll personally guarantee this," or is there language to kind of get around that?
I mean, ideally, no, right? Ideally, you don't, right? That's just. But at the same time, like a lot of our people who work with us, what they do is they say, "I invest in every deal myself," right? So I match. If you're investing 50K, I'm putting 50K in, right? Or do it at more scale. So there's that piece as well. But there's no law that says you have to personally guarantee. But I think it's easier when you say I'm investing in the deal too, right? Because then you're really practicing what you preach, and I think that adds a level of peace of mind.
Yeah, I agree. I think it's interesting because I have like two groups of people that are friends that have real estate funds or do syndications, and some of them are like, "Hey, even if I'm a GP in the deal, I actually won't put money in the deal." I'm like, in my head, I'm like, I kind of want people to have some kind of skin in the game if I'm going to invest in your syndication or your funds. What's your thoughts there?
I do too. I'm looking at it from that standpoint. I do too. But I mean, I could see reasons for them not to if they're tapped out on liquidity and they're really, managing a massive fund and massive deal flow. I could see it, but ideally, you want them. Yeah, skin in the game is a good thing.
And then you mentioned a couple ways. I think you said tapping into like a Roth IRA or even like a home equity line of credit. What are some other ways that people probably don't realize that you can tap into to invest?
As far as like finding money,
Mm-hmm.
yeah, I mean, for raising capital, those are people have savings accounts, people have cash in the bank. home equity lines. Sometimes people have stocks they can liquidate, right? Because you could talk to an investor and say, hey, you've got 50,000 here in the stock market. You don't know what's going to happen. This is a sure thing. It's backed by a hard asset, right? So that's another place people can go. But again, you'd be surprised. People find money. Like, for so many stories of even like people who did not seem like they had money, and then they come up with a few 100,000 that they keep hidden.
I
So
forgot about this.
yeah, well, you just got to ask, right? You just got to ask, and people figure it out.
What about the legal aspect? Because we are talking about social media. We are talking about, leveraging platforms where I think there is some rules around what you can and cannot say, depending on having accredited investors, all that type of different stuff. But just on a basic level, the legal aspect, what's some do's and don'ts that you post on social media?
So again, not giving legal advice, not an SEC attorney. I want to make a disclaimer. Consult with those guys.
We'll do a disclaimer in the description of the
before doing
podcast.
anything. But typically, if you're doing a 506B, let's say, you don't want to reach out to someone cold and say, hey, I've got this. First of all, it'd be stupid because they're probably not going to invest anyway. But if you're like, hey, I've got this deal you want in, you're doing a 506B, that's a cold solicitation, completely illegal. 506C, it gets a little bit more nuanced. 506C, you can technically advertise. So you can post, if you're doing a 506C, let's say a fund, you can post on social media, here's the terms of the fund, right? But if you're doing a 506B, you can still talk about deal examples without making a solicitation. Hey, if you want to learn more about this, just reach out. That's perfectly fine. All right. Again, not an SEC attorney, but from what I've seen, and even with outreach, right? Even if you're doing a 506B, you can do outreach. You're just not pitching your deals. You can do outreach to start building a relationship, right? Just like with anything else. So as far as advertising, though, if you're doing a 506B, as far as I know, you're not allowed to advertise the actual deal on social media. You're also not allowed to, for example, run Facebook ads to a deal if you're doing a 506B, right? So that's another piece that I wouldn't do. But a lot of people overthink the legalities thing, and it's really it's not as it's very important, obviously, but it's sometimes people just overthink it and do nothing. It's not a reason to do nothing. There's usually room to do something, build new relationships, put yourself out there. Certainly to build a personal brand. I don't care what kind of deals you're doing, but building a personal brand is helpful no matter what kind of deals you're doing or will be doing.
What about on the very basic level? You're meeting someone new for the first time. I hear people talking about like the 4-second power pitch, and they got all these frameworks around that. But for you, what is something that you kind of teach your students? Hey, this is like just an easy way to introduce yourself, and also mention that, hey, you can potentially invest with me, or I'm an investor.
Yeah, so we have a whole section in the program around elevator pitches. I don't remember verbatim. There's a few different ones, but one of them thinking, hey, what do you do? I help people invest in real estate without doing any of the work themselves. Conversation.
That simple, guys. That simple.
Okay, what does that mean? And then you go into it, right? You notice how I didn't say I buy apartment buildings in the Southeast in these markets because of high. I didn't talk about investment thesis, right? I didn't say, oh yeah, I do this type of deal, or yeah. Another thing, if someone wants to make it really simple, I'm an investor. So you tell someone an investor, what do you invest in? Like, who's not going to ask, oh, what do you invest in? Right? It's kind of juicy. Like, well, I invest, and then you start getting into it, right? But don't vomit on people. 4 seconds. No, 4 seconds is the arbitrary rule. But yeah, the key thing is like you say something and then shut up, right? Like, let people lean in and ask, and if they don't, okay, cool. keep it discreet. They probably aren't someone who can invest anyway if they don't ask.
I love it. Okay, I want to switch the topic a little bit. So on this podcast, and I don't know if you know this, but I'm doing solo episodes, and on those solo episodes, I am documenting my journey. So I'm saying, here's my wins, here's my losses, here's my learning lessons. And so I do these solo podcasts in between amazing guests like you. And so with that being said, I think people really enjoy and learn a lot from a loss or a learning lesson. And so what's something that you've, in the past maybe 2 years, where you're like, I kind of took an L there, but this is how I bounce back?
Got so many. I'm like, where do you even start, man?
And I think this is also important for people to realize, especially for people that are just getting into entrepreneurship, just starting to invest. Guys, all of us have had plenty of times when we thought something was going to go right. It didn't. And the thing that you're probably going to hear right now, we just are going to get creative. We're going to pivot or get creative and figure it out.
So let's say early last summer, I decided to hire a sales team.
Mm-hmm.
And looking back, I wasn't being diligent or thoughtful in the process of getting them onboarded. And so we had a guy on the phones, literally his first week, talking to live prospects, who was a quote unquote closer.
Mm.
And it did not go so well. And I brought in a guy to manage him. And to make a long story short, operationally, it was a big headache for my admin team to get those guys onboarded because we had to do it like within 48 hours. I was out of town traveling that week too. So it was like, it was just kind of a nightmare operationally. And then this guy just did not produce. He knew little about the product. Sure, money was lost, and it just created kind of a mess. And the other thing is, I kind of went against my gut in making that hiring decision, right? Which is I think most of my L's historically have come from going against my gut. I don't know if you can relate to that. I'm sure people can who are listening, but typically what happens is it's like an ego thing. Oh yeah, let's do this faster. Oh yeah, it's gonna be so big and exciting. And it's like, well, wait a minute. Is it aligned? Can we simplify it? Right? Can we streamline it? Because and there's been other situations, other stories I can share where it's like there's been a layer of complexity that's just not necessary. It's like it's like, if you ever find yourself working really hard, no one cares. It's like, it's not about hard work, it's about results, right? And so that was a lot of operational work, right? And the results were abysmal in that situation. So what I would say, this is why, when I was talking earlier about turning strangers into investors, there are so many nuances, so many layers. But for people, I know if someone listening, if they just get started, great things are going to happen. Seeing that first win, seeing that first breadcrumb, that's what gives people the strength to keep going.
That's so good. I think I listened to Alex Hormozy podcast, or maybe it was his book, and he's just like, you got to make sure to get them that quick win because, that helps so much and builds up momentum for them to go forward. What's a quick win that you typically help your students get, or is it all over the board?
Yeah, typically the very first thing is getting those profiles optimized, getting those profiles looking clean, getting their investor attraction webinar done, having the automations in place and running. And then if there's room to reactivate, tell people to text people in their phones, right? I mean, it's that simple, right? There's probably people who your listeners haven't talked to in a long time of some money. They don't even know that they're raising, right? So it's like having conversations, getting in motion, getting into implementation. You start doing that, you start getting data, right? Without data, it's all guesswork. Without data, to me, data is power. To me, having data gives me at the very least, I have clarity on what to optimize and where to improve. And now I'm in the game. Otherwise, I'm sitting there speculating, overthinking, worrying about shit I shouldn't be worrying about.
So people do want to go out there, start shaking hands, connecting, meeting new people. Is there certain areas where you're like, hey, I'll go to this type of gym, I'll go to this type of country club where it's more, wealthier people? Where do you kind of suggest people go to hang out and rub shoulders with the people that might be interested and able to invest?
The internet. That's my suggestion. Online.
I like it.
LinkedIn, Facebook, social media, all those people are online. For me personally, I don't love, it's ironic because we met in person. I don't meet people in person much. I don't love in-person networking. I think small groups like the one we met at was cool, but would I go to a general networking event with real estate investors or like a RIA these days? Absolutely not. It would just be, to me, there's a term, I learned this from a mentor a while ago, out of position networking. And if I show up, no one knows who I am. I'm not in position, right? I have to tell the same story again and again. I have to kind of work at it and show up and be charismatic and all these, which capable of, we certainly all are, right? But I'd rather walk in a room if I'm speaking somewhere and now people know who I am, or if people have read my book, or if they listen to my show. Now the positioning is there, right? Now we're having a different conversation. I don't have to do that same work again and again. So as far as country clubs, restaurants, sure, you definitely can. But I think going somewhere just to meet a potential investor, that's actually kind of rooted in scarcity, right? Because if you don't want to do something and you're trying to force it and you really don't want to be there, I mean, it's better than doing nothing, I suppose. But if there's something that you really enjoy, like if you really love golf, and then you'll probably meet people doing that, right? But or nice hotels, restaurants, but at the same time, online from anywhere, right? And you have that positioning piece because they can look at your profile, they can see some of the content you've created, they can see your thought leadership. It's just so much easier. And especially when you talk to people who are high net worth individuals, that positioning piece is important, right? You look at investor psychology, even people who are like doctors and lawyers, right? They're so about positioning because they've worked their ass off to get that degree. They've been in law school. So they very much are about that structure, right? So why go against that, right? Now, again, I'm not saying it's not possible. I'm not saying people shouldn't do it, but online just offers all these great opportunities. It's a little different, but it, doesn't limit you to a location, and you have a lot more people to pull from. And then in person, if you're going to go in person, be intentional and go to, let's say conferences or events, at least go to places where not everyone's a real estate investor like you, right? At least where you can be the only game in town, right? Because if everyone there is trying to raise capital and for the same types of deals, and like, you'll make some friends, but it's because more difficult to find those investors.
That phrase, out of position networking, I haven't heard that before, but I realize, yeah, I stay away from it intentionally, but I didn't know there's a phrase for it. I like that one a lot.
Yeah. It reminds me, I don't know if you've ever played poker.
So I haven't played poker.
Okay. So poker's a quick tangent. There's a thing in poker called being in position, right? And being in position, you have a higher probability of winning the hand. And that's just the order of turns, right? So positioning, it's one of those things you want people to see you as an expert, right? You want people to see you as an authority without being like gimmicky or weird, right? Because if you're trying for that positioning, it's different. But if you naturally have, like, if you have a podcast, you have positioning, right? You have some authority, you have some instant credibility. And so why wouldn't you leverage that in relationship building? Of course you would.
Absolutely. Speaking of podcasts, you have a podcast besides your own. What's another podcast that you recommend, or a book someone go check out and listen to if they're interested in raising private capital?
So I'll give him a shout out. One of my mentors is he's a business guy and a real estate guy, Mark Evans DM. DM stands for deal maker. And his show is called Making of a DM. It's very good, very real. And yeah, if people are in the real estate business, investing, entrepreneurship, it's a great one to check out.
I love it. All right. So, Growth House, we very much are a go-giving community. So, I say this on every single podcast. Excuse me. No one's going to reach out and say, hey, can I pick your brain? If they do, let me know, and I'm going to talk to them. So, with that being said, what's something that we can provide value to you? Whether it's, obviously rating and reviewing your podcast, something as simple as that. What are you looking for that we can potentially provide value to you when people reach out to connect with you?
Yeah, it's a great question. So if people know people who want to raise more capital, syndicators, fund managers, even investors who are going to scale from single family and multifamily, let's say, just share the podcast with them. Raising Capital Show, 5-star ratings, reviews. Got a book on Amazon, Attracting Investors, like $20. Go get the book, write a 5-star review. Would appreciate that. And then be pretty easy to find online. And yeah, beyond that, let's connect, build relationships, and I like the go-giving approach.
Absolutely. What kind of podcast guests do you want? Because I want to ask you, and I want to follow through with the value that I can potentially provide.
Yeah. So my podcast is interesting with my guests. I don't really have guests that much anymore, right? So I have like sometimes I'll interview our members, people who I know really closely, and just like other people like yourself who I just like happen to meet. But I get so many pitches for guests, like, oh yeah, this person. I'm like, I don't care, I do my solo episodes, but I'm more interested in being a guest on more of these types of shows. Speaking, even in person, is intriguing to me, right? In front of the right types of rooms. But that's of interest to me, right? Because the book Attracting Investors came out in January. It's one that took a while. I don't know, Jesse, if you've ever tried writing a book, but it's
not yet. But I heard it sucks.
It's a
grueling process.
It's a process. I don't know it sucks in some ways. It's also very gratifying in all ways.
No, I've definitely heard that.
And so to me, it's getting the message out there. I will say our strategy, we went very high level today, but a lot of my strategies for investor attraction, very nuanced, very innovative, different than the standard stuff that's out there, right? And so getting the message out there, sharing it with more people, and then ultimately bridging more of that gap between capital raisers and passive investors. That's really what it comes down to there.
Mm-hmm. You mentioned getting in the right rooms. We have a room coming up, which I told you about, our mastermind. So we'll talk offline. We got to figure that out because I definitely want you there, bro.
Awesome, man. Appreciate that.
Let's make it happen. But so many gems. I think this is going to be one that no one can just listen to passively. Like you can, but then come back to this and take some notes. Also, go reach out. One last time, how do people find you? Also put it in the description of the podcast.
Yeah, super easy. So Yakov Smart, you can Google me. I'm on LinkedIn. Easiest place to findmoreinvestors.com. If you want to dive in, findmoreinvestors.com/training. I believe that's the link, or findmoreinvestors.com/webinar. You can kind of see some of these concepts in a little more action, a little more detail.
Yakov Smart, man. I appreciate you. I'm so glad that we were able to connect and then just kind of hit it off. I'm like, oh man, I got to get you on the podcast. So I appreciate you. I appreciate your time, man.
Yeah, likewise, dude. Thank you for having me.